Breaking news, Uber is trading on the New York Stock Exchange, and we are seeing pricing action stabilize a bit here below the IPO price of $45, making Uber the first ever U.S. unicorn since September 2018 to open below its IPO price, and the first ever company with a market cap above $5 billion to do so in history, according to Deal Logic. I'm Zach Guzman, and joining me today on Wi-Fi PM is Yahoo Finance's Jeannie An, along with the Brewer Group CEO himself and former NFL player Jack Brewer. Guys, thanks so much for being here to wrap up the week. We got to check the other market action outside of Uber, though, to top off the show open. And you can see here it is red across the board. The Dow off 125 points, the NASDAQ right now off 63, and the S&P off by about 15 points. But more on Uber. That's what everyone's watching. We want to go to Yahoo Finance's Ines Ferre on the floor of the New York Stock Exchange for more on this. Ines, describe the energy on the floor right now as we're seeing Uber shares finally trade.
Yeah, definitely there was a lot of energy during that opening trade, and it opened at $42 a share. You're looking at the price right now. It's just above 44, 43, and it's, though, as you mentioned, it opened below its IPO price. And really, when I was talking to traders earlier, they were saying that they felt like 45 was a conservative price to put on it, given the volatility of the markets this week, and also what had happened with Lyft. One trader telling me it's very, very difficult to price these companies that are still not profitable. And Lyft, by the way, this morning was under pressure as well. And it lifted off some of those lows from the morning, but still under pressure. And so Uber has really tried to differentiate themselves. During their roadshow, they were saying that they are like, think of us like an Amazon, because of Uber Eats, because of Uber Freight. You also had Wedbush's Dan Ives call Uber the Amazon of transportation. So they've tried to make themselves different, but certainly the atmosphere today here, the vibe was that it was going public during a lot of uncertainty, a lot of anxiety about what's going on with China-U.S. trade talks and the tariffs and the volatility of the markets, and also just questions about the profitability of these companies.
Ines, the pricing of this aside, just because we're seeing those shares kind of stabilize now, I mean, the overall mood for how long this took, this time didn't seem to drag on quite as long as Lyft, as their IPO did, when we saw it take a few hours for Lyft to finally open for trading. That, of course, wasn't at the New York Stock Exchange. But what do you make of the way that this was handled as you saw it unfold on the floor?
Well, certainly when you saw the first price indication, which I believe was at anywhere between 46 to 48, and then it started to come down, and then when it went below that IPO price, that's when the mood started to really change. A lot of anxiety about where it would open up, and really a lot of feeling like it had to open up soon.
All right, Ines Ferre on the floor of the New York Stock Exchange. We'll check back in with you later for Uber and other market action we're seeing down there. But guys, when we talk about Uber, what do you make of the way that this stock came to market? Obviously, they were conservative in kind of cutting their expectations ahead of this, where they priced their IPO was a lot lower than I think a lot of people were expecting. But what do you make of day one trading action we're seeing so far?
I mean, hindsight's 20/20, but yeah. I mean, after the Lyft debacle, I would have tried to price my IPO as low as possible, especially given the market right now, right? Obviously, we have the China trade tensions, which they couldn't have predicted. But at the same time, you have a company that's losing $3.7 billion. And I understand that they do have a lot of assets that you can't really value right now, especially with Uber Eats. I think that's going to be something where they really cash in on down the road. But it just doesn't look good, right? When you want to come out, especially you're the biggest IPO in a long time, you want to come out and give your shareholders something to be proud of, and I think this is disappointing in my opinion.
Yeah, I agree. And the timing is so key. And this is such a specific time, right? There's so much volatility. There was they were already so conservative in their estimates. And then to come below that with all the anxiety that was being talked about, the road to profitability and when are we ever going to get there? And then for an early investor, this still might be, of course, it's great news. But in terms of the average investor to jump in at this point, there's a lot of hesitation.
It's just, I don't know. I mean, I want to build off your guys' points because it does, to me, strike me as surprising that they would have priced this so conservatively, and yet still today, not seeing a pop, seeing it trade below, open for trading below the IPO price is alarming for me for a couple reasons. One, when you look at the way Lyft priced when they came to market, they got a multiple about 10 times last year's sales. When you look at that, of course, as you know, as Jack just touched on a little bit, Lyft shares down about 30% since opening for trading, so we've seen that kind of come down a bit. But Uber positioning itself as not just a ride-sharing company, but really, as you touched on, the Amazon of transportation with Uber Eats and Uber Freight and all these other things they're trying to get into, but trading now with the very same multiple that Lyft is. I feel like investors, if you look into that, might not be taking away that this isn't just a ride-sharing company.
Yes, I agree. I think it's all marketing, right? You've branded yourself as Uber. Whenever you're calling an Uber, you could be calling a Lyft or a Juno or whatever else, but you call it Uber, right? They've branded themselves similar to Google has when you talk about the online and digital world. And so, they just didn't market themselves as a company similar to Amazon enough, in my opinion. I think they could have driven home that point a lot and brought a lot more value for shareholders. But everything aside, you lose $3.7 billion, right?
Yeah.
I don't care. I mean, at the end of the day, that, earnings are important right now, especially as we go into this economy. We're going through a China trade tension. People don't want to put out too much money because if you look at the S&P 500, right, total earnings of all S&P companies is around $170 billion. Right? You look at the China trade tensions, and that can come on. I don't think it'll affect earnings as much, but at the same time, when you have a company like this that has no positive cash flow, it's going to be really hard for Uber to excel in the near term. I think long term, you will find good value there. As you mentioned, trading 10 times multiple, it should be trading higher than that.
Well, I mean, not just that. I mean, we're also talking about growth. I mean, sure, there's no earnings to point to here, but when we talk about growth, it's growing much slower than Lyft is. We highlighted on the show yesterday, Lyft doubling its revenues year over year. Uber only about 46% when we look at it. I mean, it's not growing as quickly as some of these other names that we've seen come out and trade positively.
Right, and they're saying that at this point, for the growth to slow down, that it is not good for the company. And like you were saying, they were trying to liken themselves to Amazon as they were on the IPO roadshow. But all you have to do is look at the numbers. I mean, they lost $1 billion in Q1 of 2019.
And that's also not good, yeah.
Right, and then they also have the market share for consumer spend and rides taken. That is also down year over year. And Lyft is taking up much more of that. And they're just really creeping in on that. And so you can't look at Uber without looking at Lyft. And it's really fascinating to see how closely tied they are and how they're moving together.
That's a good point, Anna. I mean, especially if my point, the point I'm trying to highlight here is true, and that investors aren't really distinguishing Uber and Lyft as one's a ride-sharing company, one's a transportation platform, really, then you would expect them to trade. And then also, if you couple that with the fact that they're losing market share in the U.S., that obviously isn't good. That's not good for investors either. So both those things coupled, probably not surprising we're seeing the price action today.
And the lawsuits, don't forget about that.
And the driver strikes as well.
The drivers have an issue, right?
Yeah.
And that may not go away as soon as you think. And so you got a lot of things, competition, right? We got driverless cars. Where does that go? I mean, technology. There's different things that Uber will have to deal with because they're a unique company. They were the first to do it. And I think long term, though, at the end of the day, long term, you look 1-2 years down the road, I think this company will do well.
All right. Multitude of factors in the short term, though, not helping out on its day one of trading. But